Hello. Thank you for joining me today as I speak with Chad All, Portfolio Manager at Sun Life Global Investments, to discuss the Sun Life Global Tactical Yield Private Pool. Chad, given the sell-off in March and the recent recovery, where are you seeing potential opportunities?
In the span of a few months, we have seen the fastest descent into bear market territory for equity markets, followed by the sharpest rally ever experienced by some measures. The unprecedented shutdown of the global economy has been met with an equally unprecedented policy response from both monetary and fiscal authorities. This has taken many defensive, growth-focused areas of the market, such as the large-cap US tech sector, to new highs. So where do the opportunities remain? Cyclical, value-oriented areas of the equity market, as well as credit markets, still have room for strong gains when the economic recovery finally begins to take hold. However, as we expect the recovery to be uneven and produce a wide dispersion between winners and losers, active management will be key to unlocking opportunities in these areas.
What indicators are you focused on after the March sell-off and the recent recovery?
Most indicators we look at are experiencing extremes with much uncertainty. Many leading economic indicators, for instance, after dropping off the charts, are now bouncing back quite strongly, representing pent-up demand and supply as restrictions are lifted. We are concerned that these indicators will head lower once again after this pent-up activity is exhausted. On the policy front, simply put, policymakers have committed to do whatever it takes to support the recovery. In terms of valuations, it is difficult to find many asset classes that are truly cheap. While there is much uncertainty around how earnings will evolve from here, a world of exceptionally low risk-free rates and flat yield curves warrant these higher asset valuations. Which brings us to sentiment and investor positioning. And these sorts of indicators can tend to be dominant drivers of markets in these sorts of environments. Today, these indicators tell us that much of the buying has been driven by individual investors, while large institutions have not participated to the same degree and still maintain elevated cash levels. This positioning is supportive of risk markets.
Thanks, Chad. How is the Sun Life Global Tactical Yield Private Pool currently positioned?
Within the Sun Life Global Tactical Yield Private Pool, we actively added to equities as markets were in the depth of the sell-off, reaching a peak allocation of 59% when markets bottomed towards the end of March. As the rally progressed, we trimmed the equity position and currently sit at our neutral weight of 50%. This reflects the fact that our concerns on the economic recovery are evenly balanced for now by the strong policy response and market sentiment that has yet to reach overly exuberant levels. We have maximized our allocation to alternative fixed income, seeking to take advantage of opportunities within credit. We are underweight our core bond allocation versus an overweight to cash. We expect to put this to cash to work in bonds if the economic recovery takes root and yields begin to normalize. However, if our fears of an uneven economic recovery come to fruition, we expect stock markets to react negatively, giving us a better opportunity to put this cash to work in equities.
Thanks for your time, Chad. Appreciate your insights.